All right, now we're going to get into really the learning by doing section. When we go through some initial lease recognition examples. The first tab is the instructions tab. Similar to the lease classification schedule, anything that is this beautiful teal color is going to be a manual data input cell. If you have any questions on the inputs, what they are, what they're being used for, you can always come back to this instructions tab and get a little bit more information. The next tab is the Lease Amortization Example tab. This is the information that we use to create the lease amortization schedule. On the bottom here, I was so nice to include the typical journal entry structure at lease commencement and the monthly journal entries thereafter for both a finance and an operating lease. And now for the lease amortization schedule, we have our summary of our primary inputs here. Summary of our beginning balances right here. And now, all the way at the bottom, you'll see your amortization schedule for your lease liability to the left and the right of use asset on the right. And let's go through this example to show you how I filled it out. So lease term, it's 18 months, 1/1/21 through 6/30/2022. Okay, I filled this out on 1/1/2021, 6/30/2022. It's going to automatically calculate that this is an 18-month period. I then will also make sure that my first month is the month of January of 2021, and my last month is June of 2022. Fixed payments, $15,000 per month, paid in advance, increases 2.5% in month 13. It's a lot to remember, but let's go through it. So it said it's paid in advance. That means it's paid at the beginning of the period. So I make that adjustment here. Also said payments were $15,000, perfect. And then month 13, which is January of 2022, it increases 2.5%, which is perfect. Purchase option lease renewals, that's more for classification. Transfer of ownership, same. Annual incremental borrowing rate or the discount rate is 6.5%. That means my monthly discount rate is 0.54. Initial direct cost is $750 and cash incentive received is $2,500. I enter in that here and here. One thing to note about prepaid rent is if you have prepaid rent, you would obviously include this here, but you also want to think about which period are you prepaying. A lot of times it's either first or last month rent. So even if you have $15,000 per month, you may have to reduce either that first month to $14,000 or the last month by $1,000, depending on what it is. To go over a little bit more about how this is calculated, liability accretion is just the interest expense, which is taking that monthly discount rate based on the balance of lease liability. The present value is taking the period. So if it is paid in advance, period starts at 0 because you paid it that day. If it is paid in arrears or at the end of the period starts at period 1. We'll use that period and the discount rate to generate that present value. The ending balance is calculated taking the beginning plus your liability accretion, subtract out your lease payment to get that. Further right of use asset, I think it's easy to see. First, how it's calculated again, taking your lease liability, adding in initial direct costs, subtract out any incentives, and add any prepaid rent. That's how we get to the $258 beginning balance. Because this is an operating lease, I first calculate my straight line rent expense that is going to be hitting my income statement as such, taking my total remaining lease costs divided by my total lease term. And then my asset reduction or that plug is simply taking this $15,000 subtracting out this lease liability. And over time, that amount will get bigger and bigger. For the examples that you're going to be doing today, you're going to be using longer payment periods than just 18 months. The easiest way to add periods is just copy this and drag and drop this down. One check to do is, let's say that the ending is now 12/1. You want to make sure your ending balance for lease liability for the last period is always 0. Same with your right of use asset. You see now, this is definitely not 0. This is negative 120,000. So what needs to be updated? This is 12/1/2022. This lease expiration date needs to be updated. So my lease term is updated. And now I have 0. Just some checks and balances for you to perform when you're going through. I'm going to delete this out. Just do this. Maybe I'll just do this. Perfect. Okay. I suggest creating separate tabs for everything that you go through today, but you certainly don't have to. Hopefully that is a more than thorough rundown of the occupier lease schedule. We're going to go into some questions with it. So, still using the example sheet that you guys have, what would the journal entries be at lease commencement date? Provide the debit to the right of use asset. Hint, hint, there is a box for what that debit should be. So I'll give everyone about a minute to go through this. All right, answers are flowing in. You guys are right, 258,314, which is coming from more easily 258,314 in this box. Awesome. Okay, training wheels are officially off. Based on the information on this slide, I want you all to create that amortization schedule. I will give everyone around 5 to 6 minutes to complete this. And then we can settle up and start going through some questions. The first question being, of course, what's the total present value of the lease payments, i.e. what is the lease liability? 161,818. Okay, so how we got through that is, so first 2 months were free. So I made sure that. The other thing was the first or last month rent was paid at lease inception. So I also made sure that was 0. The increases happened on 1/1 every year. So 1/1, 1/1. The term is from 1/1 to 12/31/2023. My annual discount rate is 3%. I had initial direct costs of 1,000, incentives of 2,500. That in my prepaid rent was that last month rent of 52.53. So I got to, based on all that information, I got to 161,818. Okay. Now, what is the journal entry at lease commencement date? Provide the right of use asset within the webinar chat box. So we know that 161 is the lease liability. So the right of use asset is going to be, starting with that lease liability of 161, add in my initial direct cost of 1,000, subtract out my incentive of 2,500, add in my prepaid, to get to 165. So you'll see that here, 165, 161, and then we plug and play those other little feelers in there. So now if I assume this is a finance lease, what would the journal entry be for the month of January 2022? To show my schedule again, if I have this under finance lease, right here. And here is my payment schedule. I skip 2. the first 2 months. The last month was prepaid at inception, so this is also 0. It increases on 1/1 by 2.5%. And I filled out my measurement date, lease expiration date as such. So now the question is, what would the journal entry be for the month of January, provide the right of use asset amortization? So if I go all the way over here to my right of use asset amortization, remember the right of use asset amortization is just taking that beginning right of use asset, which we calculate as 165, divided by the shorter of the remaining lease term or the remaining useful life of that asset. For simplicity, we'll say it's the remaining lease term. So this is what's going to be driving that entry. So 4599. And your monthly recognition of cash will be January 2022 is what we're looking at. So interest expense is 277. It's coming from my liability accretion. My cash out the door is 5125. That means my lease liability plug is going to be 4,800. Okay, now let's assume this is an operating lease. What would the journal entry be for January of 2022? So all I did was I changed this to be operating. Now I'm looking at what this looks like a little bit big. Now I'm looking at what the entry would be based on this row in an amortization schedule. Which would be, I have to figure out what my lease cost is, which is that straight line expense hitting the income statement, which would be 4,806. My asset reduction, the plug, is going to be the difference between 4,806 and subtract out liability accretion of 277 to get to this asset reduction of 459 or 4,529. And recording monthly cash payment is similar to any other type of AP, just sending it out.